So, this video is coming straight off the last one, and I'm just going to do a video dedicated to exterior and interior ranges and why we need to not take interior ranges once we have closed an exterior target, why those ranges are not going to hold and why they are going to go up to the exterior order block and not hold off of these interior ranges just above, like so, right? This is literally from where I ended in the last video, why it's not going to hold these ranges. We got to an exterior target. Once we get to the exterior target, we're now going to flip to the exterior target. We're not going to go to exterior to interior and then just fall all the way down. It happens not very much. Does it happen? Not very much. It doesn't happen that much. That's better English. So we need to stop taking trades in those scenarios. So what we will do is we'll just go to the daily real quick. We will skip a candle. So we got a whole new thing we can look at here, right? Our exterior target right now is, if we are holding this range, we need to now break above here. So long term, our target's here. This is our exterior target. Exterior target on the bottom right now is here. Okay, we have levels here as well. We have the order block, we have the low of the order block, we have the open of the bullish order block, we have the midpoint of the bullish order block, and that's all I'm gonna mark on the screen. It's actually too much for me anyway. Don't really have this many levels. We can also have this as well, just to have something else. Go into the 4 hour. The 4 hour, we still need to go higher unless we're holding aggressively, which is going to be that daily bearish order block low, or we're going to go higher into the open or the midpoint. These are all exterior targets. Go into the 4 hour real quick again. Put our levels on the screen. Here, nothing else I care about. I'm not going to mark the fair value up because the inversion one overlaps that. And the order block is here, which is the inversion fair value gap high. Okay, so our exterior target right now. Our exterior target after closing this level on the 4 hour is going to be all the way up here at this 4 hour bearish order block. Because if we close the 4 hour, which is an exterior time frame, our exterior target is going to be here. Go into a lower time frame, 15-minute. These are the exterior ranges I use when I'm trading intraday. Is going to be 15-minute ranges. So if my exterior target is something like a 15-minute high, once we close it, I'm looking to go to the exterior target for that. So if we close the high, we're going to the order block, or we're holding aggressively, which is also an exterior level. In this scenario, we hold it aggressively, and we just do the same thing over and over again, right? When we close those levels in a higher time frame, we're not expecting any 1 minute range just below to hold. We're looking to come all the way down into that 15-minute level, because that's the exterior part of the move, to then hold and go higher. It's in every single range. We can just mark every single one here. So once we close that, we're looking at the order block for that, which is here. We're going to the 1 minute. quickly just cut the chart to here. Okay. Once we close this, right, we close it. We need to hold it until it closes. It's closed on the 15-minute now. Right, so now it's closing the 15-minute, we can retrace back down. So, once we retrace back down, that we know is going to happen if we don't move up aggressively, which we're clearly not doing here. You have to realize we've just closed an exterior target. So, anything after that, which is, did it close in that candle? It did, okay. Closed. Once that closes, the likelihood of these interior ranges holding are quite unlikely. Quite unlikely, unless you're holding aggressively. Which, for holding for that long, is not an aggressive move for me. This is the thing. Some of these still work out, right? This one didn't, actually, because once that closes, plummets off of this range and goes down to where it should go down, which is the exterior range, the exterior 15-minute order block, and deeper into that. Once we close those highs, these ranges will not hold that likely. It's not that likely they'll hold. They still have their moments where they hold. Do they go far? A lot of the times, no, just like this one. And then we had the other one here. Let's look. Are we holding it aggressively? We close it. We've not closed it. Closed it now. Okay. This candle taps down. Not because it's this range. This is an interior range. This isn't why we're holding. We're holding aggressively off the exterior, which is the 15-minute high. If we're holding it aggressively, we're going to move up higher. It's not holding because of this interior range. So that kind of does mean that if there is an interior range next to an exterior, we can still look at that interior range as something to hold because there's an exterior target there. But let's say this range was further down and we know the 15-minute order block is somewhere down here. We're not going to take this range because we've not tested into anything exterior. So this interior range is most likely going to fail. We need an exterior level with that for these interior levels to work if there's one near it. If not, if there's not a exterior level like there is in this scenario, is we're waiting for it to come down. We're waiting for it to come down to the exterior. We're only taking interior trades off of interior things. So the moment you hit an exterior target, we're no longer taking interior setups. But, for example, if there's a 15-minute exterior here, 15-minute exterior here, and we've not touched any of them, we can still take all these interior ranges inside of that big range there. Because it's interior to interior. We've not hit any exterior targets. There's no reason why these interior moves can't work. The moment it touches this exterior, this trade here for a short most likely is going to go higher because we've hit exterior. Especially if we close exterior and we know exteriorly it has to come up to here. Why are we going to take this interior range? It's going to get blown straight through because it needs to go to the exterior. So, yeah, those are the two examples in the 15-minute. We'll just see if we can find any on the time frame or the little example I did, wherever my levels are. We just went back one day, right, or a couple of candles. Okay, we'll just do it from here. Okay, cool. This is exterior, this daily. Okay, in this range, right, if we're holding this, if we're holding this, our exterior target on the 15 minute to close is this. On the other side, it's this. If this closes, this is an exterior level, it's a high. So any small 1 minute range above this, which is below this, isn't going to hold. Why is it going to hold? It's a random interior range. We're going to come down to the 15 minute order block to go higher. So then we go into here, and then we want to see we've hit exterior target. We want to close it. So this is either a sweep or it's going to use this to break this. This is where the interior still works if we target exterior, is if we need to break it. So we can look at this range to see if it's going to hold. Most likely won't. So swept, exterior level tapped into, interior range broken. Can still try and hold if we need to break it above. We failed it. Okay. Am I taking a trade here off of this? No, I'm not. I'm waiting for this to hold, to break this, hover around here. If we've not closed it yet on the 15-minute time frame and we have a good amount of time left and there's a interior range around this level, then I would take that range, knowing that I need to stay above this level to close it on the 15-minute before we go lower. So that gives me an opportunity to get a a long still up for profit before we flip down. Or we can wait for it to close, see if it's holding aggressively. If it is, we can take that trade. If it's not, we can either look for a short down to the 15-minute order block wherever it would have been to see if it's holding to go higher now. So if exterior failed, exterior to exterior, exterior is here. So if we know nothing's going to happen as in it's not going to flip direction until we get to another exterior target, we failed to go up long off of the exterior. We need to get down to the exterior at the bottom side. Why can't we take the short here? We haven't hit an exterior target yet. There's no reason why this isn't going to work. We failed the higher, so why is this range here on a 1 minute, which is an interior time frame compared to the 15-minute? Why is this going to hold? Especially when it's already held anyway. Closed, comes down, holds, so it's already been used. Fouls, meaning the order block for this range is also the same for this range, meaning if this closed, this could hold again. It didn't close, so why is it gonna hold? Especially when we need to get to that exterior target. So the only thing you could have done here is clearly swap the top. Range here, this isn't gonna hold. Why would this hold? Once it fails to hold and close this, we have a range here we can take. Right? This tests into the fair value gap perfectly. We take the midpoint or the open. If I stop loss up here, I would in this scenario just have it here, not at the high, because it's a big one anyway. If it comes all the way up, I'm sure it'll take us out. And then we're targeting that exterior levels here, which is in this scenario 1.03. And it's as simple as that. Once we stop looking at interior ranges off of exterior ranges as something to hold, and we actually look at it in a logical way as it's going to be exterior to exterior and not exterior to interior, we're going to pick up a lot more wins and we're going to eliminate a lot of losses. So if we fail to break up exteriorly, we might be breaking down exteriorly. And we do. We close it on the 15-minute now, so we can return higher if we want to. Where can we target the lows here? So if we're going to move down aggressively, and the order block is here. Almost marked the wrong one now. Okay, swept, broke. Can move up into this if we so please to. Okay, we're into it now. We can go as high as this as well. So, if we can go as high as that, we just want to react off of what is holding. We have to realize that whatever's holding here is still the exterior range, because we're in that exterior range once we hit that 15-minute order block. Go into the 5-minute real quick. Find that 5-minute order block is here. Okay. So, let's move forward. We know we've not hit anything exteriorly other than, is this the, what is this? Okay, it's the 15-minute order block low. We clearly failed to hold aggressively, so we're going to get rid of that. If this is holding, this is an exterior level. Why are we going to take trades off these interior ranges? If we are, we're most likely going to lose. Okay, comes higher to the highest point. Didn't retest down at all. Fails to hold the 15-minute order block. Comes up to the highest point. This is still exterior. Right, and now we want to see if this is holding. What would we have to wait for the most confirmation is going to be that higher that brought us up to level, which is all the way down here. Or we can start looking for interior ranges created and closed. So the first one here would have been here. Okay, so this is interior move, closed, pushes up. We don't have a high, we have a high and a low. The order block is here, if that makes sense. The order block is here, sorry, the order block is here for this low. This is already holding, just telling us we are going to go down to here. We have a higher, we have a low, we don't have a high for this small range. You can't really call it a range because there's only a low. On a 15-second, I know there's a high, so I'm looking at this as a range that's been closed. I can wait for this to hold, and then I can take a trade off of the next range that closes, or I can just straight up say, look, we closed this, we've created a range here, we can trade into that. I already think we're at an exterior target, which is the highest point here, being this 15-minute. Oh, sorry, the 1 minute inside the 15-minute range. We can take that down to the range below if this is going to hold. Or we can wait for a bit more confirmation, wait for this to close, wait for it to push up, and then take a trade off of it. Just like so. It's as simple as that. Once you have a logical idea of what's happening and not just getting in off of such a robotic kind of thought process. So we know this most likely, if direction's down, shouldn't hold. What's our direction though? Long term up. So if this does hold, we're just going to create another 15-minute range here to here with a high and a low. It's a 15-minute. Cool. So we can see that down. So exteriorly, if this closes, once this closes, we need to go to an exterior target, which can be here, or the fair value gap. You have to realize the fair value gap is also an exterior exterior target. I'm sorry if my volume was low. I didn't have my mic next to me. It should be better now. So our target is here. This shouldn't hold. This should not hold. We didn't close the low. Why is this going to hold? We're at the exterior. We need to close above it. We already have, luckily. Or have we? No, we've not. Okay. So I wouldn't be expecting to take any longs personally until we close that. Still haven't closed up. Still haven't closed up. Closed it now. Okay, cool. So we close it in this candle. We have to realize we close it in this candle. So we went up and went down. So we're holding it. We tested it. This could be holding aggressively. We need to close this. We didn't close this yet. We now closed it. Cool. So that's already showing us that cycle. Trying to go higher. If we can close this, move lower, I'm sure one of these probably close the 15-second. In my opinion, this is enough anyway because we closed these. Coming down to here, moving aggressively because we back tested this. The exterior level inside of this is here. This is where we can take an interior range because there's an exterior. There's no exterior. We cannot take these interior trades. We can if we want to lose. If you want to keep doing that, sure. But let's not be silly. Let's not take them. Let's go a lot higher now. This range already been testing too. I mean, we're gonna gap to the next exterior target. What a surprise. There's nothing here. Of course we're gonna gap. There's nothing here. What could we look at here though? If we go back a couple of candles. Okay. So exteriorly, we're looking at this daily right now. Once we close this, this range can now be used. We've not got to our exterior target yet. Our exterior levels are going to be higher. The Fair Value Gap. I'm not going to mark these out because we know we just saw it didn't tap all the way down. Let's go on a 1 minute real quick just to see if we could have reacted off of this holding. In my opinion, I would have tried this. Got above it, tapped down into it, trying to hold aggressively. Could have tried this, even if it failed. Sorry, that's not what I would have went for anyway. I don't know actually. I still think this is fine. Certain scenarios, like I said, if my direction is up, I'm not really using bait ranges as something I'm waiting for to hold, to confirm. So I probably would have taken this. If I wasn't taking this, because I was waiting for that bait range to confirm that it's holding, we closed here. The bait range is this. Close the target. So it's successful. So then we can get this. So midpoint of this candle, I would have gone for something like so. Got to that first target, which is that higher there, which activates the level. We didn't go anywhere. We didn't test into anything yet. I would have given this the benefit of doubt. It would have came down, and it would have stopped me out. And that's completely fine. I would have still taken that. Nothing wrong with that at all. Once it shows that it's not holding aggressively, if it was showing that, what would we need to close? What tested into it? First of all, It's going to be this. Well, if we close that, we're clearly not holding aggressively anyway, right? What I'd kind of want to see is this close. If this closed, this looks like it's a 5-minute low. It's not a 5-minute low. Okay, so there's no range in the 5-minute. So we'd have to go all the way down to here for this to foul anyway. To move up aggressively. We also have the fair value gap here. It's kind of this dipping down doesn't really mean it's failing aggressively until we close this range. But once we tap into here, we're into the fair value gap. So we will just move up anyway. So regardless what happened, taking a loss or whatever I would have done here, once we reclosed this, I would then look for something to take to continue higher. First thing I would have looked at, go back in the 5-minute, high and the low, trade back down into this range, which is here. We actually tested into that. We tested into that already. Okay, so if we tested into that already, our next range is here. Cool. So we could have taken a trade here to continue higher. We're still trying to hold off with the 15-minute, which is an aggressive, is an exterior level. We can still go higher. Could have taken that, and you can still take this one because we've not got to any target yet. So you can just keep cycling longs until they foul. So could have taken this one here. We fouled the higher. We can't take this one because we fouled, so we don't even try and take a trade here. Once it fouls, it's going to plummet down. We failed to hold aggressively. Now we're going to try and hold slowly. We're into another exterior target. So why would we take an interior short here? We wouldn't. Of course we wouldn't. We've got into an exterior target. What I would do, we go into an exterior target. I still think we're going higher. I'm not waiting for a bait range. I'm getting straight into this trade here, and we're trying to take that higher. Once we get to a more of an exterior level inside of this range, is going to be up here. Once we get to that, we can flip back down, right? And that's why it does do so, because we got to the exterior part of the range. So go into a lower time frame, I'll show you what I mean. On the 5-minute, we have this exterior range here to here. Once we get to that, we can flip down. Even if we're going to go higher, we can still come down first, meaning this trade here, yeah, we've not activated it. This level, this order block here, we've not activated it because we're not close to higher. But this can flip us down to here. This could hold. We could close above and then come down again. I'm going to get rid of some of the levels here just because there's a lot going on. So once that holds, we can take that right there. What I would have done is either go straight up off of it, so once it tests down we can take that, or we wait for this range to close, this range here, test down, take that. So it would have been order block, so we would end here because this wasn't created yet. Would have went for the midpoint, have a low here, and we target that. Order block here is what we would target. Why that order block? Because that is the order block for this range. If it's going to hold anywhere, it's going to hold here. Cool. Go into a 5-minute again. So we've not failed to hold this fair value gap until we break below here. So what can we look for? If we stay above the midpoint of this order block that we've not even gained yet, we can still go higher, which we do. Cool. So once we hit that exterior target, we continue higher. Now we've closed the exterior target, we can come down to the exterior on the opposing side. So, are we long in, if there was a random range here, are we long in that? No. This is a random range, are we long in that? No. It's a random range. Are we long in once we get down to here? We can do, because that's the exterior part of the move. Right? It's as simple as that. Don't take random interior ranges and you'll realize that you can make money. Okay, we've got to our exterior target. Another exterior target here. Did we even try and hold this? No. Just went straight through it. Okay, so like I said, you just react off of what's holding. Regardless of where you think price is going long term, just react off of what's happening. Once we hit that, okay, what can we react off of? Okay. Closed. This brought us into here. Looks like we could be going down. Of course we're going to go down. But we closed the range we need to. We trade into it. We go lower. Okay. Go on to the 15. We now have an exterior range created. We have a... This brought us up to here. This is bringing us down. This is the current range. If we're holding this, now, it can bring us down to here. The order block is going to be here. Lowest fair value gap is here. So, if holding an exterior 15-minute level, just here, this can bring us down to here. This is a random range. Remember this. This is a random range. This isn't anything. This is in the middle of nowhere. Why is this going to hold? Stop taking longs off of these random ranges. Gone to 15-minute again. Any reason to think we're going higher yet? Not really. If anything, we've got another range here. Now, if we close above this, we can expect us to no longer trade down. If we close this, we can expect. So, we have a new exterior range here we can use. So, if this was to close, we're not going to hold a random range here to short down. We're going to come up to here before we short down, or to the order block, the 15-minute one. Let's quickly put that on the screen. Get rid of this real quick. Take a look at what's happening. So, this is the 15-minute order block. We're already holding it before we gained it. So where we're going to go to the exterior target. Exterior target's been here. This is a scenario where this range can hold because the 15-minute order block's here. So if it was to hold, show signs of holding, we could have taken something here. It didn't. It goes higher into the range here, so we know it's probably a 5-minute order block, or whatever it tested into. It tested into something, which is also the exterior range door. Remember, anything inside that 15-minute candle is the exterior. We can go as high as this before it even tries to go down, but it just goes down off of that. I'm assuming 5-minute order block. Go into the 15-minute again real quick. Gonna go back a couple of candles. Let's not spoil anything. We still need to close this. So we can use this range up here, especially because there's a 5-minute range. Okay, so we have a 5-minute range we can use to go lower to break that exterior. So once we test up, we want to see if that's holding. It's not holding, so we can't take anything off of it. If that was holding, we would have tested it here, closed here, and then been able to get something. We couldn't. So we failed to move down. We failed to break the exterior. We're going to break the exterior up here. So it's exterior to exterior. Straight up. Now we have not broke this. We've not, but it looks like we're gonna. First of all, we still need to close this. So I wouldn't even take any trade right now because it's quite indecisive at this point in time. Okay, so I just had to pause it there real quick. So just continue. So we still need to close this. We haven't closed it yet. We close it if we stay above it on this candle. Once we close it, it's already confirming we're trying to close this. But because we close this, we can now come down to here if we're not holding aggressively. Did we not close that? Hold up. We did close that. Cool. Okay. Nice. So we close that, we can come down into it. So let's look at the levels here, here. Get rid of this. Move this to here. Cool. So we have the order block, fair value gap, low, high. Not holding high aggressively, we're going to come down into this. Cool. So once we get to the target, we've still not got to anything. That's why we don't do anything. It kind of sits in the range band market sideways. Once we hit the target, why is this range going to hold? You see what I mean now? I hope you're following, because it should be quite straightforward. Once you hit an exterior, interior is not going to hold. Interior holds when we've not hit any exterior. That's why these interior moves work until you get that one trade that you think, oh, why did it fail? Well, because you hit exterior. So it's no longer going to work. We close it, so we can come down, hold the range, try and go higher. So what could you have done? I would have taken that first long up because we hit exterior. I'm not waiting for a bait range. Getting into that because my stop loss is going to be pretty big if I'm getting in off of that previous low. Where is the previous low? We don't have a previous low until here, but for me, I'll just have it here. This is good enough for me. Maybe I'd even have it smaller personally, because I need 2R. Regardless, that's besides the point. I'm taking the first trade up, then I'm taking my second one again here. So close. Okay, we can long down. This already tested into, plus this isn't anything important unless this is an exterior level that we want to quickly look at before I start yapping. Okay, we didn't close. If anything, I'd be looking at this. Okay. Did we test into that? If we tested into that, this can hold to move us down. Okay. That's the 15-minute order block. So if we're holding that, we can game the range, meaning we can go all the way down to here. What would be confirming the holding of that is going to be closing this low here. So we could have still taken a long there if we didn't care about that. Or we can start looking at shorts to cycle. Closed, closed, closed. We're creating lower lows as we go and lower highs after hitting that 15-minute. So it's already telling you what it's trying to do. We closed. We're moving up. We could have taken a couple of shorts here if we wanted to, right? Because if we're holding this, it's going to attempt to go down. Your target is here. Once we get here, we're waiting to see what happens. Are we going to continue down once we get to here, or are we just going to fail to gain that range by coming down to here, and we're still going higher? And we're still going higher. So, are we holding it aggressively? The high? Are we holding it aggressively? We've not closed the range, so why is it going to hold aggressively? It's not. So, we needed to close this to show it's holding aggressively. We didn't. Also, in another sense, or in other words as well, we go up to the highest point of this range here, which is an exterior target. So we have two exteriors here that are going against each other. So we either just don't do anything, or we just wait for one of them to break out. And this is going to bring us down to the exterior part of the range for this, which is down here. Once we get here, we can then start longing again, because we closed the high. And that's going to push us all the way up. Going to the 15 minute. Take a look at what's happening. Okay. If we was looking at the 15 minute the whole time, we would have got a bit more of an idea what's happening. This is pretty clear. Close, it's going to come down, obviously, if we're not holding aggressively. So, go back in time. Not holding aggressively, the 15 minute order box here. Let's see if it's holding once it hits it. We're looking to see what it closes, what it can, if it's going to go lower or higher. Go into the 5 minute, dip down with the 5 minute. Okay. Hit the 5 minutes. Since we hit the 5 minute, we closed and moved down into the point here. Once this candle closes, this isn't an order block at all, but this traded down. What I'll do is I'll take this personally just up, because we're holding it. We're closing the ranges. We hit an exterior target. We failed to move aggressively off of this. We've now moved down into the range. We closed the higher. We got to our exterior target after getting to our exterior target on the top. We've got to our exterior target back on the bottom. We can now move up again until we get to a point it can flip out, which is going to just be the order block. And our target is going to be this high here. Once we close that higher, we're seeing if it's going to hold aggressively again. That's our exterior, the first exterior. If it's not, it's going to come down. So, exterior right now failed, okay, and we back tested it. We pushed up into that first range. Failed to hold the bait range, moved higher. Off of, let's take a look. Okay. Closed, just came down to that first fair value gap, moved higher. I would have just missed that whole long. I would have been waiting for it to come down lower. I prefer it going into the deepest fair value gap for a long and the highest fair value gap for a short before taking a trade off of anything. So, now we're going to the 5 minute. Let's take a look. Moving up aggressively. Clearly. Closed. Held this range. Okay. If we're doing all this, it's trying to get to the exterior target here, right? So we can start looking for a reason, if we didn't already get to the target, to start longing up after this tested, which could have already been here. Closed, test down, get into that. Same thing again, closed, test down here. I wouldn't have got this actually. Only thing I would have tried is this. Once we get to that exterior target, which is here, if we're going to close it, which I don't want to spoil it, and we've only got 2 minutes anyway. If we're going to close it, we shouldn't go down. It did go down. So right now it's looking like a sweep. We don't have a 15-minute range here until here. Closed, traded up, held, got to the bottom of this range here. So I'm not going to take a short because this is going to be on a 5-minute. You have to realize once we close this range, it's going to try and move down, meaning once we get into that, that is the exterior. So this could be used to break us higher, which it ends up doing in the next candle. Now we've closed the exterior higher. So we can still look at that, and then we can look at order block for this entire range is here. This high and low, it's going to be here. So I'm waiting for it to come back down to that high. Not holding it aggressively. Okay, so we're going down to the exterior target, which is all the way down. So why is this range going to hold? This is a random range. Why is this range going to hold? It's not. It's a random range. It's going to bring us back down before we go higher. So it brings us down. It attempts to hold. Doesn't hold. This is the real part though, right? I'm pretty sure this is the actual order book for this whole entire range. But actually, never tested after closing. Closed at the same point. So coming down to here is pretty likely anyway. So once we get to that, we're just taking a look to see if it's holding. Right, remember we're just reacting off of what's holding, what's not. We couldn't even close the range here, so this isn't going to hold anyway. So once it comes down, we're not taking anything. If anything, we're taking a short to get to the next exterior part, which is here, which we didn't test into yet. Now we have. We would wait for something like this to close. If this closed in the 15-second, I don't know. If it did though, I would have taken this candle here. Let's test into this order block. Once we get to the exterior for this 1 minute range, which is going to be here, we can move down to this part if we're not holding aggressively. Where's the highest fair value gap? Well, the lowest is here. We come to here. So we're just reacting off of what's holding. And at this point we're already going to trade anyway. Long trade. But yeah, hope you get the point. Once you close the exterior, it's going to come down to what's equal to that, which is going to be the bottom of the range. Stop looking at random ranges in the middle of nowhere with no exterior target as something to hold. Once you've hit an exterior target, why are these random longs going to hold if you need to come down to something like that? These are not going to hold. They're never going to hold. And if they do, because they still do hold, yeah, obviously anything can hold. I think you're seeing them hold every now and then and going, yeah, I've seen that hold before. It's a range. The setup's there. Everything's there. It's going to hold. It's not. It's not. Taking those trades, your win rate's going to be like 15% if you only took those type of trades. It's not going to be high. It's going to be really bad. Your setup can be great, but your logic flow doesn't make any sense at all. So I hope this helps. If you still have some questions, I'll make another video on this same concept.